Today we have three types of investors to learn about. One, the investor who resorts to a conservative and stable income generating investment strategy. Second, speculators who would opt for high returns and are willing to take high risk. And third, gamblers who would try their luck in casinos or in buying lotteries. Let's learn about these three in detail. What's important is that an individual investor knows which style is more comfortable and then would stick on to it. Nonetheless, there is an element of speculation involved in all kinds of investment decision making. However, gambling is putting money at risk by betting on an uncertain outcome with the hope that you might win money. Let's now draw a comparison between investors, speculators, and gamblers. The attributes of comparison used are plan, the risk appetite, returns expected, the decision making process, whether leverage is used, asset type, and suitable examples in each category. Let's start with plan. An investor would make a conscious choice looking at all available options before them and choose an investment strategy, either short or long or both, to suit their financial plan. A speculator, on the other hand, will be looking at short-term plans. When it comes to the gambler, he or she would resort to putting their luck into a quick test. The next attribute is risk. For an investor, moderate risk is what would suit their risk appetite, whereas a speculator would prefer taking high risks. A gambler has no other choices but to take a chance with very, very high risk. Let's look at return as an attribute. Investors look for stable and moderate to high appreciation of assets. The speculator, whose risk appetite is high, would definitely look for higher returns. However, a gambler who places his or her bet on luck would be quite uncertain about the returns that they'll be getting. The next attribute is decision. Fundamental analysis and careful decision making marks the decision making process of an investor, whereas a speculator relies on speculation, which is guesswork, based on information available around them, or will go by market sentiments. Gamblers would hardly have a rationale behind their decision except for those who do it for fun. Now let's look at leverage. Investors mostly do not invest by borrowing funds, but speculators who are short-term profit seekers will borrow funds. Gamblers better not borrow because they are counting on their luck alone. Going by the assets, investors could look at a portfolio mix of, say, stocks, corporate bonds, gold, government securities, mutual funds, bank deposits, and real estate. Speculators invest in stocks and derivatives like options or swaps or forwards. Gamblers buy lotteries or engage themselves in wagering or betting arrangements. Now let's take a look at examples or the role played by different people who come under the categories of investor, speculation, and gambling. Under investor, you could look at a careful investor, you and I as an individual, or a fund manager. When it comes to a speculator, hedge funds will be the best example to go by. Gamblers are either casino visitors or those who buy lotteries.